It really felt like Friday yesterday, but it does not feel like Friday today. I'm all out of whack. Yep, good morning, good morning. No, like they didn't have it they didn't have the AM up yet. I'll share it when they do. All right, good morning, everybody. Another record on the year. I was hearing this morning that the S&P has set 20 new records this year so far. We're not even into April yet. Um, Big storm coming through the US. Might see a little bit of move in nat gas. I mean, that thing's been such a turd, but whatever. Maybe the last hurrah, right? Before we finally get into the stronger spring and summer weather where we won't see anything else out of nat gas. Japan up the most, more than 2.25%. We're going to get a lot of Fed speakers today from around the world. Remember, it's rates week, right? So we've seen a lot of rate changes, especially, notable ones like Japan. And we're going to be seeing these Fed speakers or central bankers from around the world. And Powell speaks today at some kind of the touchy-feely, the Fed cares and is willing to listen symposium. UK up more than 0.5%, small caps less than a quarter. Dow closer to zero, S&P and the NASDAQ at least in the green, but basically flat, and then Hong Kong flat. So we're primed for, a continuation should we want it. But after the week we've had, I think we're just looking for the market to keep what it's got, not really expand more today. We'll see when we dig into the charts and kind of lay out some levels. FedEx had a really good earnings. Their cost saving and cost cutting program that they put in has finally started to pay off. I thought I heard more on layoffs. Remember, one of the key things that Powell continued to hit on this week was employment numbers. So you really want to pay particular attention to any sort of reduction in workforce. And it's kind of subtle. There was an article that I read 6 weeks ago or so that talked about how, headline layoffs in places like Google or Apple, the big names, is misleading because they have more in their workforce now than they did before COVID hit. So, if you do see any headline numbers, check their employment levels to see, where they're at now versus where they were pre-COVID, and see if they're really reducing a workforce below, you know, pre levels. And funny enough, you can use AI for that. So, get a little bit of a leg up. 9 o'clock, noon, and 4 o'clock. Powell, Barr, and then Bosick. We're also going to get European Central Bank Lane. We're going to get German President Bubba. How you like that? So it's going to be a busy day. These aren't big hits, right? They're just they're threats. Anytime you have a central banker speaking, there's the potential for them to inadvertently say something they weren't supposed to say it in a way that a reporter misunderstands, get misquoted. The algos will grab it and run with it and move price before it gets settled, right? And we can see price make some significant moves really fast just on the slip of a tongue or a misrepresented phrase. So you always want to pay particular attention when they're talking. It's almost like going to the races just to wait for a car wreck, right? We've got Christine Lagarde chipping teeth right now. So, it's just going to be all day long. There's somebody talking today. Best week of the year after a dovish tilt. So that's the drum beat right now. So the volume's a little light this morning, sitting at around a 63. We just looked at what's on the economic agenda, and there's nothing really there except Fed speakers. But whatever these Fed speakers are primed to say, the market is a little bit worried about it. That's exactly why we use these tools and approach it from this point of view. We can't always tell as retail traders what's going on, right? Why the price might look compressed, or there really wasn't much of an overnight move. And when the volume is low like this, it can be attributed to a nation that was maybe on holiday and their market didn't open, right? Say like it was a holiday in Europe. It wasn't, but we wouldn't know just looking at the volume, right? But when we see this market maker move here, and we see the low volume, and we see price in this really compressed nature, those three pieces combined tell us the market is sitting out, waiting on something, and they're worried enough that they're hedging. Hedging is cost. It's money spent, right? They will not spend money frivolously. So if they're worried, they'll buy insurance, they'll buy a hedge. I know us retail traders, we've got different ways to hedge, and oftentimes we'll use a hedge tactic for a profit play. I mean, why not, right? We're small enough that we can do that. But when they hedge, it is cost. So they're spending money to do it, and they won't do that unless they're worried about something. And we don't have to guess or assume that they're hedging. We know they're hedging. There's an open range in the Globex called IB, initial balance. This is a concept that was developed years ago, and it's a 1 hour open range. It starts at 6 o'clock at night and goes until 7. Now, in the last few years, that same phrase, I've seen it used more and more at the 9:30 open and calling that initial balance. Not the way I was taught, but it doesn't matter, right? Maybe you could have two in this new world, but to me, an open range, like you get at 9:30, can be a 1 minute open range, a 5 minute, 15, 30, 1 hour. You can even use just pivot high and pivot low if you're trading tick charts. but that's just an open range. IB, on the other hand, initial balance, there was more to it than just time. There was the lack of open markets around the world. There's a lot of other things that went into it, but it's still, at the end of the day, it's just an open range from 6 until 7 at night. That open range kind of sets the tone for the night. Was it narrow or not? And then after that, did we break out of it? Did we stay inside it? Then there's a 2 o'clock move. Between 2 and 4 in the morning is a section that has been termed the kill zone. I didn't name it, so don't get on me for that. That's just what it's called. Statistically speaking, the market will move more in that 2 to 4 hour window than it will at any other 2-hour window in the entire trading day. Bigger than the open, bigger than power hour, bigger than any other point in the trading day. That's interesting to know, right? If you're trading in the overnight hours and you're awake between 2 and 4, that's a particular time to pay attention to. Very often we get a liquidity gap play where at 2 o'clock we'll make a big move and then we reverse it and run it right back up to where we started, closing the gap. I have considered more than once getting up just to trade that, because I mean, why not? That's a nice it's a nice layup, pretty easy play. Generally though, I get in around 4 or so and I catch the rebound, which is more than enough for me. But this range that we're looking at today is just that. It's a really tight range. We set the cap last night without ever coming back up and getting into that call wall. We're just holding compressed here, winding up more and more and more energy. The problem is we just looked at the economic schedule and there's no catalyst on that schedule. Retail sales aren't enough to send us out the door. Powell is on at 9, but it's not supposed to be any sort of policy statement. It's more of a touchy-feely, we listen kind of symposium. So whatever the market is worried about, it very likely has to do with the Fed speakers that are lined up and the message that they might be trying to drumbeat. Between the ADR high and the ADR low, we're not exactly in the middle, but we're pretty close. So there's not a lot of bias on which direction we're going to go. Most of the days this week when we started the morning briefing, we were close to one side or the other that early in the day. And at this point, we're not. So we don't even have that as a bias yet. One thing that we can say is that we're tucked right up underneath that call wall, which is a significant level of resistance. And we're at the end of the week, so there's really no expectations, that they're going to roll it out of our way today and that we'll expand to the upside into a new wall. It's very likely the market's just going to want to keep what it got and go into the close without giving too much back. Now, it's worth pointing out, and I know there's a lot of things on my chart. This is the weekly pivot point, way down here at 52. We'll just round to give some easy numbers, right? The weekly pivot point is at 5,200. And of course, it only moves once a week. When we're above it, we're bullish. When we're below it, we're bearish. And when we get too far away from it, we have to start considering a little bit of a mean reversion play. Now, we're closer to it now than we were, mid-afternoon yesterday. But this weekly pivot point won't move until Monday when we come in, or Sunday night when we come back in and we see where the new pivot point is. So really hard to make an argument that we're going to expand even farther away from the weekly pivot point than we are right now. It's possible, it's doable. We never want to say that the market can't do something, because it can. But the likelihood that we'll go up and breach yesterday's high and go even higher than that to get into the upper wall is slim to none. The good thing is if we do start to see anything like that, we will need a lot of options flow. So we should be able to see it, in the Qs, in the SPY, SPX. We should be able to see it in even the futures flows, right? Cumulative delta, that sort of thing should be really strong flows if we're going to run up and break that. We're going to want to see the Mag 7 stepping up. We want, a good strong ticks, weighted AD above 250. We need it every bit, every tool today if we're going to get above that and get up there. The upper ADR half, the red line is at a cog line too, 53.31. If we keep moving to the downside, 92 is a cog line as well. We have two missed daily pivots now. That one from yesterday and one from Wednesday. So far today, we've already hit our pivot point. It's right here. We've hit it. We've crossed through it multiple times. It has no value as any sort of support or resistance. It's just a line in the sand and a place of perspective. Keep your eye on the market maker move throughout the morning to see if it continues to widen out, get bigger. That'll show that they're increasing their hedging. And look for an opportunity to play a really big liquidity gap. So you're looking for one really big candle. We just got 3 in a row. Really good size. But that's not quite what we're looking for. Notice this morning we were playing a reciprocation play where, we get underneath VWAP X amount and we can take that same distance, project it to the upside. So kind of a tit for tat or reciprocation. So what we got here, we got there. What we get here, we may yet get there. That's a pretty balanced play where we see price just cruising up and down through the VWAP until finally something breaks. And it also starts to develop a little bit of a megaphone pattern where each lower low is reversed and brought back up, and each higher high is reversed and brought back down. And we develop this megaphone until finally something breaks. So price just gets a little bit wider and a little bit wider until finally something goes. And that makes sense, right? Because liquidity resides on the other side of the pivot. There's a bigger candle. Now we're starting to get into that liquidity zone concept. This opens up the possibility that we get to that lower ADR with a little bit more conviction to it. And the market maker move continues to grow. They are continuing to increase their hedging. Put it on a 10-day, 30-minute, you can see this shallow zone. That is the concern, right? If we break through this low that we're looking at, there's nothing here. We can get down into 52.50 before we start to land on anything. Structurally speaking, right? Price-wise, looking at volume profile, there's nothing down here. So we tend to move through those levels relatively quick. As we can see on our way up, we didn't really hit anything. But remember this liquidity patch that we talked about yesterday. So right around 52.90, 52.80, right around that zone, we're going to expect a bit of a pause. Bring that back over here, 52.90, 52.80. Hey, gee, look at that. That's where the ADR half is. We would expect a pause there. Maybe even an end of the move there, but certainly some sort of reaction at 52.80. Remember, everything lines up, right? Always. We've got a new VPOC. This one's going to be over our head. So we got a couple below, and now we've got one above. That's at 53.15. We'll see what we get out of that one. Other than that, there's not really much left here that can give us much insight. Not today. So we're getting a preview of next week's weekly expected move. We don't want to focus on the outer lines. I added that just because of how far we had run up. We want to focus on the inner lines. And even though next week's box is not yet set in stone, one of the things that we can do is we can measure this box. The box that we currently have, and we can set it on next week's range and just kind of get a feel for what next week looks like. Now, it can change through the day today, and you notice I wasn't trying to get perfectly exactly right on the line. We're not, building cabinets here. Doesn't have to be exactly perfect. We're just trying to get a feel for what the volatility looks like next week. This was an FOMC week, right? This was some volatility. Next week looks like a little less volatility than the week we had currently, which makes sense. The more we run up, the more volatility is suppressed, right? That's the way it generally works. So we'll look at this again on Monday. But for right now, it really looks like next week is going to have just a little less volatility than this week. We are 4.5, basically, 4.5% above the 10-week. And while there are examples where we have been higher than this is just about as far as we want to get from that 10-week. At this point, we would expect to see price pause, consolidate, begin to chop about while we wait for the 10 to come up to us and or to turn around and move back down towards the 10 or both, right? Because it doesn't have to be a binary event of one or the other. We can chop some like a grind to the downside, slowly chopping our way down lower and lower while price is waiting for that 10 to come up. So a little bit of both. The bias that we're going to continue to go up from here for another week, it's doable. We never want to say price can't, but it's already made an exaggerated move. Going higher from here would be twice as hard as going higher from the breakout point, right? I like the analogy of a runner running up the side of a steep hill. And the more he goes up the hill, the more weight we put into the backpack. So we're not tripping the guy or pushing him down the hill, just adding more and more and more weight to what he's already carrying. So he's running out of endurance, right? He's getting tired from the run. It's getting into higher elevations. So it's harder on him that way. And then we're stacking more weight on his back while he's running. That's price trying to climb even higher from here. It's doable, but it's going to need one heck of a catalyst. And all we've got is Fed speakers. I don't see a reason for the plunge protection team to come out and start chipping their teeth about, really loosening up monetary policy and saying any sort of statements that would galvanize this market into one more leg higher from here without a pause. So base case argument is we're going to stop and chop at least a little bit. And that's what we've been seeing, right? A new leg up into blue skies. We chopped about another new leg up and we chopped about, and then another new leg up and we chopped about. Even in that, when we use Linreg, you can see the grind higher even through the chop. I mentioned that grind higher so that you don't try to go in and just straight up short the market. You can play bearish neutral, but in the backdrop, while the S&P, might be slowly grinding higher, we've got a lot of equity markets that are just continuing to expand extravagantly. We're almost 1% away from the 10-day moving average. We're not back up to our average turning point, which is around 1.25 to 1.5. So in the shorter term, looking in the smaller time frames, we're not overbought. We're not overextended. We haven't moved too far too fast, and this doesn't owe us a pullback on those smaller time frames. Yesterday, I cautioned people not to short the market just because we had run up really big on Wednesday. And until the later part of the day yesterday, that warning held true, right? It was choppy and nasty, sure, but the argument at 7:30 yesterday, 8 o'clock, when we were still sitting in Globex at 53.11 cog line, was don't short this thing just because, not for GP. You need a reason. And we didn't get back down to that same level until yesterday afternoon after 1 o'clock. The 1 o'clock auction, no less, which hopefully you were prepared for. So it's the same thing today. Don't short this thing on GP just because you think we've had a really big run up and it has some kind of, like, it owes us some kind of pullback. Because in the shorter time frames, we're not overbought, we're not overextended, and it doesn't owe us a pullback. On the weekly, yeah, we need to take a breather, but not on the shorter time frame. So things that are down this morning, the China ADRs, Bitcoin, consumer discretionary, we need those things. If they were flat, it would be more likely that they could come out of being flat and start to rally. But the fact that they're completely down more than that 0.5% that we use as a benchmark, even semiconductors are down this morning. Everything that we had yesterday that said we could continue to rally higher, we don't have any of those today. But not rallying higher is not the same thing as going short. Even the FANGs are down this morning. Not enough yet. They're not to our benchmark, but they're working on it. So we got the FANGs down, semiconductors down, China ADRs, Bitcoin, even gold miners are down. So a little bit of precious metals. On the other side, though, for some structure, we do have transportation that is up. So you Dow theorists are going to love that. No, I'm not against it. All right, so Apple had some news yesterday. They're getting sued again, or the Justice Department is coming after them for the third time. It's the same thing as before, that they, were using monopoly tactics. This time, I think it was in their Play Store that they're going after them for. But Google's still holding the line. Microsoft still pressing into new highs. Amazon too. Now on the day, sure, this morning we're a bit pulled back, but looking at Amazon, we got into new highs on the year this week, tagging that 180. And there's the old market phrase, if 80, then 100. Well, if 180, then 200. But we got to get up into that 180 and above. We got to hold it and keep it if we're going to look for that 200. On the year, though, this is still looking really good. All the moving averages are spread out in a nice fan. They've got a good angle to them. And this is a weekly chart. So those are weekly 10s, weekly 20s, weekly 50s. And they're all just, that is the textbook image of a strong, healthy trend. It's not getting out of control. And it's not as beautiful as, say back here. It's not that good. But it's still going good. Microsoft, same thing. And in fact, it kept the break. Right now, I mean, this morning, sure. I mean, we're pulling back a little bit, but look at those moving averages. It's got a nice slope to them. They're spread out really well. There's nothing in any of this suggesting that the market is done. It is a crowded trade, to be sure. And, at some point, there's going to be an imbalance. But that judgment won't come from the candles themselves, right? It's going to be an overzealous anticipation of earnings that disappoints, or a new lawsuit like with Apple. It's going to be some extraneous situation that's not in the candles that finally slows down things like Microsoft and all these other FANG names. Now, Google's a little bit of a representation of what it's going to look like when things start to slow down a bit. But it had a nice reset to the 50 again. We had our first one back here, and then we got QRA, right? And Google was able to kind of play with the rest of the market that rallied after that QRA event. And then we had another one here near the 1st of March. So now Google's kind of got to get it figured out, right? It needs to break this 154 and really continue to the upside. Investors Business Daily had put it on a base list, right? They send out an email that points out good companies when they have candle patterns that fits a criteria that they like. And they like cup and handles over there at Investors Business Daily. They really love cup and handles. This wasn't a cup yet. It was just half of the cup. It was down here. It was in the base of the cup. And they send out the email, pointed out that they really like Google. It's got an improving relative strength. It's got a good base. You know, it's a strong company, blah, 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 all the good stuff. And I marked where their email said 5 points so that I could point it out to you guys. I'm already in this. I don't need IBD to tell me when to trade something. But I wanted to share with you, you know, their point of view and where they consider to buy at. They are a more cautious trader and long-term trader than I am. I'm not that cautious. They would say to buy it after it breaks above this 153.78 and that this whole range is a buy zone and that it's, quote, viable all the way up to 162.5. There's so many different perspectives out there, right? So many different types of traders that there's always somebody willing to take the other side for whatever reason. I think maybe my point is that you probably don't want to short this just because you think it's gone too far too fast. For me, I went long after this really big gap up on a weekly. That's a really big gap up on a weekly. And to me, that's bullish. Plus, it's a TRB, trendline breakover. But I just like the gapped up weekly. And there's this old phrase about a market struggling with a pivot point, that if it can't do it in an open session, it'll do it after hours. And so when we ran up off of that 50 and we got tangled up in the 10 and we couldn't get through it, market just jumped it over the weekend. The thing about a gap up like this is, one, I'm looking at a weekly chart and the week isn't over. So this candle isn't valid. It's not valid until the week ends and this candle closes. Two, we don't know that the gap up is going to hold until the next candle shows that we go higher. So if we don't go higher and we just chop sideways here, that's a warning. And if we actually start to fall back down, well, that's confirmation that it's not holding and that we're going to give the gap back. We'll see. I really like this swing low pattern too. It's all three of these bars combined. So not just that doji down there, but all three candles. That's a textbook, very beautiful swing low. That's a pinup poster right there, you know, like those cute little kitten calendars that you can get. So Microsoft looks good. We broke out of last week's range and went into the close yesterday, still sitting, you know, high up on the week. And I just marked last week's high. When we bring it over into the intraday, we can see that so far this morning, we're holding it. It doesn't have to hold last week's high to still be considered bullish, but it really needs to hold that 420, right? Which is quite a ways off. I mean, I don't think there's any argument about holding 420 today. And really with the candle that we have there, we can already break it down and put a half back on it. That's 422. we can get our 786, which, you know, when you've got a market that's trending and it pulls back, that pullback 786 is about as far as we want to see it pull back before it continues to the upside. One single candle on a weekly is multiple candles on a smaller time frame. That's our trend up. This could be our pullback to the 786, where we would expect it to find support and then continue to the upside. So we've got it marked. That would overshoot previous week's high just by a little bit. It would get us right down into this liquidity that we saw a lot of defense yesterday. See all these wicks here where they were willing to buy it back up. So we'll see. It's looking pretty good. The thing is, for today, I wouldn't have a lot of expectations of a continuation today. The most important thing is that we hold what we already took and not give a lot back. I think that's more important to the market at this point than trying to get even farther on this run. For the Qs, we have this dark pool print around 443.5. If we do continue to fade to the downside, that's worth keeping your eye on. Dark pool prints tend to have that sort of history to them. Here's an example back here. There's an example back here. So I'm not saying we're going there, but if this fade continues, that's the target that I would look for, and it's where I would expect a pause, maybe even a flip, like we had back here. Netflix has this really nice wedge on the weekly, and it's trying to push up this morning while a lot of other names are fading out. So look for a half back rejection on Netflix. Let's see if it really is able to get through this 628. We are at that 200% so though, and that's a little bit of a concern. I don't think we've given it enough time for that 10. We might need another week, or at least the start of a new week, before we leg up to the next zone. And at this point anyways, we would already want to bring up our pivot point. And that doesn't even fit anymore, really, from the time frame that it was drawn on. We'd have to start over. Yeah. I need to start over with a whole new set of levels. For the moment, we can just use the last big candle. So 620, kind of the line it needs to keep. IX10s and inside bars, that's all well and good unless you're inside a really big bar. Then it's not so good. So the blue one that I marked out, that's what everything's inside of. It's not really all that great. But this smaller bar, that's a better range to be in. And this next one, smaller bar, it's even better. So if we get another candle holding inside here, and then even another candle, that would be an IX10 on a weekly in a really tight zone that would have some follow through to it. Bank of America's had this amazing week. I mean, it's been a really amazing week. That's a great expansion bar. But like we had on these previous expansions, we're going to expect a little bit of a sideways big bar, sideways week, big bar, sideways week, big bar, sideways week, right? Kind of get the idea. We haven't had a sideways week unless you want to count that little doji play right there. We haven't had a good consolidation for a bit. So keeping Bank of America underneath 38 for at least a week looks pretty good. Options on Bank of America. It's got some decent liquidity, but it's also a product that's less than $50, right? So it doesn't have crazy expensive options. This is the call side. We're looking at $81, $130. These are crazy cheap compared to, the thousands of dollars that you need to play some of those high flying tech names. So really cheap options. And like I said, liquidity is not fantastic, but it's not bad. It's a reasonably decent bid-ask spread too. And even in a closed market, like we're sitting here now, we're still looking at 2-penny spread. I know it's not perfect. So China ADRs, cloud computing, Bitcoin, gold miners, retail, which we're going to get retail data this morning, gold miners, gold again, silver, semiconductors, all of that is down. That has to change if we're going to get any sort of a rally today, right? And the only things that are really up, transportation, bonds, uranium. Real estate's not quite there. Give it just a little bit more this morning, and it might be above that 0.5%, that benchmark that we use. But there's just not really a whole lot here this morning. Now with crypto down, things like Hood, Mara, Riot, these names are going to be down. So we could have a play in those Bitcoin proxies. I wouldn't look for a long-term short here, right? We're just talking about a day trade. And if we're going to get any sort of rally today, we need the fangs to turn around. At the very least, we need them to stop falling. And we're going to need a catalyst from somewhere. So watch the Mag 7, watch the semiconductors, and watch crypto space. If neither of those three groups turn and try moving to the upside, then we're not going to get any breakout expansion to the upside in the indexes today. That's what I got for you guys. Watch the clock, listen to the Fed speakers, and I will see you